Now, here's an interesting video. CalPERS, the big giant pension fund. I've done numerous videos on this one in particular. So I'm reading this article at Zero Hedge. They're weighing the pros and cons of setting reasonable return targets. And I'm thinking to myself, versus what? Versus cooking the books? The Ponzi scheme, right? And that's what he says, versus maintaining the Ponzi scheme. We're thinking about coming out and telling the truth, the real numbers, versus continually cooking the books. We're going to try to do the quote-unquote right thing. I told you long ago the pension problems would be coming. And I think it's safe to say they are here, and right now they are here to stay. Because to make these things solvent, it's going to take a lot of money, a lot of tax revenue, a lot of governments coming up with tricky ways to increase income somehow. Because of this reasonable return target rate has not been reasonable at all. They've always accepted that it should be 8%, and lately it's been horrible. And it's billions upon billions and billions in each of these pension funds losing year after year, month after month, unless they raise interest rates. Once they raise interest rates, the pensioners will be happy again. Or at least so we think. That depends. If they raise rates and then the markets crash, your pension, whatever they invested it in, is going to suck anyways. So you're screwed again. But generally speaking, higher interest rates equals very happy savers and pensioners. In just a couple of months, the largest pension fund in the United States, CalPERS, will have to decide whether they'll rely on sound financial judgment and math to set their rate of return expectations going forward, or whether they'll cave to political pressure to maintain artificially high return hurdles that they'll never meet, but help to maintain their Ponzi scheme a little longer. The decision faced by CalPERS is whether their long-term assumed rate of return on assets should be lowered from the current 7.5% down to a more reasonable 6%. Now, I think the last time I talked about this, they were saying it was 8%. That's the typical. They dropped it to 7.5%. And in that article, I believe it said the consideration would be that it should be at 7%, but someone was like begging, please don't do that. Like, no, don't do that. Just keep it there because the numbers are going to show that it's horrible. We're going to have to nail these taxpayers. Just like leave it at 7.5%. Just don't leave it unchanged. So 8 to 7.5 to a more reasonable 6%. Ooh. As pointed out by Pensions and Investments, the decision has far-reaching consequences. First, a lower rate of return will equate to higher contribution levels for municipalities throughout California, many of which are on the verge of bankruptcy already, by the way. Second, given that CalPERS is the largest pension fund in the U.S., a move to lower return rates hurdles could set a precedent that would have to be followed by other funds around the country in even worse shape. Yes, we're looking at you, Illinois, he says. The stakes are high as the CalPERS board debates whether to significantly decrease the nation's largest public pension fund's assumed rate of return, a move that could hamstring the budgets of contributing municipalities as well as prompt other public funds across the country to follow suit. And I'm going to add, we're talking municipalities, right? Yep. Oh, property tax assessment. Yeah, listen, we're not asking you. We're telling you it's about to go through the roof. Remember the story I did a few weeks ago? They had to raise. They're saying we're going to be raising property taxes 130%, and I bozoed the math, and I was only calculating 30% higher. It was 130% higher than what it was. So if you're paying $1,000 a year, which is ridiculous, property taxes, it's going to go up $1,300 on top of that. $2,300. Here's your new bill. Have fun. So do you think if they go to the 6% reasonable rate, and they're going to realize, well, we're the amount of income we need to now put into this thing is out of this world. How can we possibly deal with that? Hey, you taxpayer. Consumer. Hey, consumer. Don't want to hear that you ain't got money to buy groceries this week. Don't want to hear that you had lentils to eat last night. Don't want to hear that the big banks got everything and we got nothing. We don't want to hear that. Suck it up and pay your higher taxes, you consumer. Not looking good, guys, because that's the only way they're going to get more money into the system. It's the only way. Either returns are good, interest rates are good, or they're not. And when they're not, they got to get the monies from somewhere else. And you guessed it. It is always the U.S. taxpayer, or in any country, the taxpayer. You always, always, always foot the bill. You may not know it. You may not even think it. Oh, it's just government. They need money. I don't mind pitching in more. The government. They're spending it like drunken sailors, giving these whatever millions of contracts to all their buddies who are absolutely raping and pillaging us financially. I'm looking at you, Halliburton, $45 for a case of soda. $1 million a month bill to do laundry. Yep, talking to you, Halliburton, and a bunch of others. But they can't tell them, no, listen, you've made enormous profits, unimaginable profits. We need you to cut back on those. You're going to make great profits, but you're not going to have these enormous profits. Oh, no. Go after the taxpayer. Don't leave us alone. Yeah, you're right. Property tax is going up. How do you protest property tax? How do you say that's unacceptable? 130% increase. I'm protesting that. Do you stop paying the property tax? You could. You could stop paying it. That's a way of protesting. And then they'll put a levy on it or a lien. And then after a few years, they'll say, okay, we tried to collect this. It's now turned into this, and late fees has turned into this. You owe this full. And if you don't pay it by this date, we're going to sell the property, your house, and the property to the highest bidder to collect these fees. So listen, about that whole private property thing, Constitution, property rights. Whoa, where did the property tax part of that come in where they could take your private property no matter what? Last time I checked, you owe money on a credit card or something, they can go after you for court, you can get a judgment and that kind of thing. But they can't actually take your house and property and sell it out from under you and because you owed a credit card bill. No. But that's a credit card company, and this is the government. And the government always gets his money. Always. Uncle Sam always gets his money. So what I would suggest, if this is possible, if you are able to go to your county tax collector or city, county tax collector, and say, listen, I own the house on such and such address. Can I pay for the next few years in advance? What's the maximum amount of years out I could actually pay? 5 years? Okay. Assuming you had the cash to do so. I'd like to pay those property taxes now, if you don't mind. Sure, no problem. Because when the pension things come in and they start jacking everybody up, they're going to go into the accounts. Oh, this one's paid up for the next 5 years. It's automatic. You're not even going to have to look at it. They're going to run a report. All these we can do analysis. This is how much money we're expecting to come in, and yours is not going to be included because yours is already paid. So everyone else, you got 130% property tax increase. I didn't. I thought ahead and paid in full. Now me, on the other hand, not possible. I'm renting. Not possible. And I'm also locked into a lease. And I could have chosen a 2-year actually. And I'm still actually debating, should I call them or email them, put me in for a 2-year, because if I recall reading that contract, it stated that if I want to leave before the term is up, the lease, I can pay $1,800 and be off the hook. Potentially I'm losing my security deposit as well. But again, if I had to get out, okay, there's a house, there's an opportunity, silver exploded, I want to buy a house now. $1,800 fee, they already got my security deposit. I'm out, see ya. That way they can't say, oh, listen, we know we raised you $50 a month for your rent. This year, it's going to go up $200. Whoa, what happened? Well, Hillsborough County, Florida, man, they raised the rates 130% for property taxes, and that's killing us. It's killing us, We have to pass that on to you. I'm sorry. That's right. Pass it on to the schmuck taxpayer, the consumer. So that's potentially where this goes. So the government I'm sure they do realize, and may have come to the conclusion, the party on Wall Street was a good ride. We rode that horse until it died, didn't we, boys and girls? And it's about to die because we have no choice now, or we're going to have an epic pension system implosion beyond anything we've ever seen if we don't allow the rates to rise. Retirees, it's going to be a bad nightmare. Having said that, if I'm to look at what the Webbot's been saying over and over and over again, throughout the years even, that's exactly how it goes, in that they don't deal with it, the pension system blows up anyways, and the markets crash. So you could have great interest rates, but if the things that those pensions are invested into start collapsing, then what? It means nothing. The interest rates mean nothing at that point, unless the pension fund invested it into something specifically that was attached to when those rates rised up to whatever they rise to. It affected it in a positive way. But if it was invested in something else, stock, whatever, bonds somewhere else, and the bonds suck, and something happens, and there's a flood of bonds and flood of sales, oops. So I don't know what the hell is going to happen, but this is the largest pension system in the country, and they're not saying 8 to 7.5 to 7. They're saying it's now 7.5. Reasonable is 6%, and you're talking about so much money that even 1 percentage point off is a lot of money difference. I mean, an enormous. So we're going from 8 to 6. That's a 2 full percentage point drop. Ooh. It says, of course, the math would seem to imply that a lower return assumption is warranted given low global interest rates in equity markets that are drastically overvalued by almost any historical measure. Moreover, for 3 out of the past 5 calendar years, CalPERS has missed their 7.5% return threshold on their 10-year cumulative returns are 6.2%, a far cry from their 7.5% projection. And as a bonus, someone emailed me firsthand knowledge, and it has to do with the retirement system, pension system. As soon as this page loads up, my email loads up. Hang on, let me pause this. Let me pause this so I don't keep you waiting. Let me find it. Got it. Hey Joe, I am a retired UPS person. Today is the 1st of the month. Our pension payments did not get sent out. First time ever since retired in 2009. Prudential actually writes our checks. They say they are having a technical issue. Excuse me. They said they are having a technical issue and hope to resolve the problem soon. Did their bank implode? I have no idea. Just thought you might want to know about this situation. This is the Western Conference of Teamsters Pension Trust. As far as I know, this involves retirees in the western states. Thank you. From Rick. First name Rick. So here I am again doing a video on pensions, and I get an email today at 3:03 p.m., by the way, that says we're supposed to get our pension check, and it's not here. First time ever since 2009 when I retired. It's a glitch, little technical glitch, right? How many times have we heard that word glitch come up over the last couple of years? Wall Street, glitch. High frequency trading crash, glitch. Crash this company. Glitch. Someone fat fingered. Oh, glitch, 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 glitch. ATMs are shut down. Glitch. I can't get on my banking information. Glitch. All of a sudden, glitches, huh? Glitches everywhere. Hold on. I had another email just looking. I wasn't sure if it was relevant to this. Thought, well, I'll just read that one too. So anyways, again, like I said, if you have an opportunity to get the hell out of that pension that you have, any way, shape, or form, I'd get the hell out of it, take the money and run, buy you some metals, and do whatever the hell else you want with the rest of it. Precious metals, that is. Take care.